The stock market has been stuck in neutral lately. One week everything rallies, the next week it all pulls back, and by the end of the month most portfolios haven't moved much at all. But here's the reality, you don't need a booming market to grow your money. Skilled investors know how to make progress in any market by using the right strategies. In this breakdown, I'm going over 4 high-quality companies I'm building positions in and how I'm using option strategies to generate income and buy shares at better prices. These aren't hype names or risky plays. These companies have strong fundamentals and growth potential in digital healthcare, fintech, semiconductors, and global e-commerce. Let's get started. Stock number 1. Hims & Hers Health. Hims & Hers is quickly becoming a major name in digital healthcare. It connects people with licensed medical professionals online for treatments in areas like skin health, mental wellness, hair care, and weight management. Revenue grew from about $500 million in 2022 to more than $2 billion last year. Turned the corner into operating profitability for the first time. Strong cash position with no serious debt issues. The stock currently trades at a forward price-to-earnings ratio around 63, which is a little rich for me. Instead of chasing the stock, I'm using a cash-secured put at the $40 strike price. This strategy pays around $200 per contract, which lets me earn income while waiting for a better entry point. If I get assigned shares, I'm happy owning them at a lower cost. Stock number 2, SoFi Technologies. SoFi is reshaping personal finance by combining banking, investing, lending, and money management into one platform. It's become a popular modern alternative to traditional banks. Membership jumped from 3.4 million to nearly 12 million in just 3 years. Revenue surged from $2.3 billion before the pandemic to more than $24 billion today. Profitability is improving, and operating margins are expanding. Forecasted earnings per share growth, 55% over the next 2 years. Forward PE sits around 31, with a PEG ratio below 1, suggesting reasonable value. Unlike Hims, I'm not using options here. I'm buying shares gradually and building a long-term position through dollar cost averaging, especially after the recent 15% pullback. Stock number 3, Taiwan Semiconductor, TSM. Taiwan Semiconductor is one of the most important companies in the world. It manufactures nearly 90% of the world's most advanced chips, powering products from NVIDIA, Apple, AMD, and Qualcomm. When you invest in TSM, you're investing in the backbone of artificial intelligence, cloud computing, and advanced electronics. $1.5 trillion market value. Operating margins around 49%, which is impressive for a manufacturing company. Expected earnings, $11.49 EPS in 2026 and $14.13 EPS in 2027. Forward P/E sits near 26, with a PEG around 1.3. I prefer owning it at a slightly lower price, so I'm selling the $260 cash-secured put for roughly $300 per contract. If the stock drops, I'll get shares at a discount. If not, I keep the income. Stock number 4, MercadoLibre, MELI. For international growth, MercadoLibre is a strong long-term pick. It's the leading e-commerce and digital payments platform in Latin America. Think of it as a combination of Amazon and PayPal in one company. Dominant market position in Brazil, Argentina, and Mexico, operates both online retail and financial services through Mercado Pago. Taking advantage of digital transformation in emerging markets. Strong revenue growth with long-term expansion potential. I'm building a long-term position here slowly. It brings portfolio diversification outside the US and exposure to a fast-growing digital economy. Final thoughts, even if the overall market is trading sideways, opportunities still exist. You can generate income, lower your entry price, and build long-term positions using clear strategies. These 4 companies give exposure to powerful growth themes: HIMS, digital healthcare, SoFi, fintech, and personal finance. TSM, semiconductor and AI infrastructure. MELI, e-commerce and digital payments in Latin America. The key is simple: stay patient, stick to quality, and use smart entry strategies, like cash-secured puts, to improve your returns over time.